Welcome back, viewers. This is your tutor CPA Charles Kafel, and today we are going to continue our series on process costing, and we are looking at this question, which says Tororo Factory Limited produces product B, which passes through 3 processes: process 1, process 2, and process 3. They are saying the data below relates to the month of May 2020, and we have the items. We have the processes, that is process 1, process 2, and process 3. Process 1, we incurred direct material, 40 million. We incurred 20 million in process 3, process 2, and 24 million in process 3. We have the direct labor costs. Direct labor cost, process 1, 30 million, process 2, 15 million, process 3, 20 million, 80,000. Then the direct expenses, we have 12 million, process 1, 2,250,000, that's process 2, and 10 million was in process 10,768,000, that is process 3. Then we have the production overheads, 10 million each process, and below they are saying 200 units were introduced at the beginning of the process, that is process 1. Then we have the additional information, and within the additional information we have the items, and we have a column for normal losses in percentage. We have a column for actual production in units, and the last one we have a production for scrap sales. Those are in units, and what it means is that all the scrap or all the abnormal losses and the normal losses plus the abnormal gains, they were all scrapped units. It means we never had wastages. Process 1, we have 10% normal loss, 17,500, that was the actual output. Then the scrap units were sold at 1,000 each. Then we are seeing that the process 2 have 5%, and process 3 will have 2% as in terms of the normal loss percentages. In the actual output in process 2 is 16,800, then process 3 it is 16,400. Then the selling price for the scrap units, it is 2,000 in process 2 and 5,000 in process 3. Then we have the required. They are saying the required, the part 1 or Roman number 1, they are saying process accounts. We are required to calculate the process accounts, abnormal losses or gain account, and the finished goods stock account. So we can go to where we are going to be doing our computations. I copied up some of these stuffs, but we are saying we are preparing Tororo Factory Limited process accounts for the month of May 2022. We have the direct materials. These are the ones that we are given up in the question, and we have this table also that was also given in the question. So we can start with our workings. These are our workings. So if you are to compute this process account, there are certain steps we have to follow in order to make sure that we can be able to calculate and get the rightful answers. So for the sake of learning, allow me give you the formulas, the steps we are going to be following whenever we are computing a number on process account, because when you don't analyze the information at the beginning, it will be a bit confusing, especially if you are not sure of what you are doing. Then we can say this is step 1. Allow me label them. We say step 1. We have to, first of all, we identify the inputs. These ones, they are already given the question, and they will always give you the inputs. And we say the input is 20,000, which are the units that we are given down here. 20,000 units were introduced in process 1. So we can now proceed and we'll go to our step 2. Step 2 is about computation or compute the normal loss. And step 3 is to compute our scrap values, or the scrap sales. Then we go to step 4, where we are going to be computing our expected units, the good units. We call them the good units expected. Good units expected. Then step number 5. We have to identify the actual production. Permit me to use PDN for production. And step number 6. Step 6 is to identify or to compute the abnormalities. We compute the abnormalities. And how do we compute these abnormalities? Is by getting the good units expected with less the actual production. We see whether we are having an abnormal gain or an abnormal loss. So when you have got that, we can be able to get the last step, that will be step number 7, where we are required to compute the cost per unit. Compute the cost per unit. When we get all of this information, just to know the process account, if at all you can be able to identify these information and you get them right, then process account will be done. You will not get any challenge, because the rest of the things is just application of what we've been talking about. they told us that the normal loss in process 1 was 10%. So it will be equal sign 10%, 10% of the input. Why are we saying the input? Because you can't get a normal loss on the output. A normal loss is always on the input, because that's where we suspect that we may lose this within the process. It will be 2000. Then when we are getting the scrap value, it will be our scrap units. These are the units we are scrapping. In terms of the normal loss, we multiply by the unity price for each scrapped unit. Sorry. Which will give us 2 million. And this 2 million is our scrap sales in terms of the normal losses. So we come here and we determine the good units expected. The good units expected, we said we get them from the inputs we less the normal losses. It will be equal sign the inputs minus the normal loss. So we get 18,000. When we remove 10% of from the 20,000, we get 18%. The other person could get it in a sense that since you have known that the normal loss is 10%, then to get the good units expected, you will use 90% of the inputs. Because if 10% is a normal loss, then automatically the 90% is supposed to be our good units expected. Then we identify the actual production, and to get this actual production, if it's not given in the question, they should have given you the abnormalities, whether we had a gain or whether we had an abnormal loss, so that you can add back or you deduct from the good units expected and you get the actual production. But since we are given the actual production here, we shall just be transferring the figure 17,500. So we get our abnormalities, and we are saying we are getting the actual production, we less it from the good units expected. We expected to produce 18,000, but we produced only 17,500. It means we have an abnormal loss. This becomes a loss, an abnormal loss of 500 units. We can also determine the abnormal sales, abnormal loss abnormal, or you can call it scrap sales. But these scrap sales, they are different. They are different to the normal losses, because these abnormal losses, for them, they are not catered for when we are determining the unit cost. We only determine the unit cost using the abnormal, sorry, the normal losses or the scrap value, scrap sales that are coming from the normal losses. Hope you can be able to remember. If you don't get it well, you check our previous videos, because we talked about those and we explained more about them. So we shall get this, we multiply by our selling price for the scrapped units, then we shall be getting that. So we are saying now, to get our cost per unit, we shall need to first get the totals up here for the cost we incurred. That is totals For this, we can just get equal sign sum. We sum up the whole of these costs we incurred in process 1. They are giving us 92 million. And when you get the totals there, those will be the totals for all these processes. Then we are getting our cost per unit. Can just add in here, and we say it is cost per unit. I can call it CPU, meaning cost per unit, so that you can be able to identify that. We can be equaling to, you can put it this side, and we said it is total process cost minus the normal loss, the scrap value of normal loss, scrap sales of normal loss. Then we divide all of this one over the expected. We are saying the whole of that is over. It is over the good units expected output. And we said to get that, we get the inputs, we less the normal loss units. Then we close that bracket, and that's how we determine the cost per unit. That's how we do so. Then we can fill in our figures so that we get to know how much we are going to be using. But we can copy this one and we put it down so that can move it from here and we put it down here so that we can create space. Paste it there, and we make sure that this one, the whole of it is pasted. We can also paste it here. That's how we determine. We can get the cost, the unit cost from here. We get it down. We said it will be this. Can get it from here. Can get it from here, and we say it is equal sign this. We said it is going to be this, but we can put a bracket because we are going to be more subtracting. We subtract the normal loss value, which is that, and we divide by the expected units, which are 18,000. Don't divide by the actual production. We are dividing by the expected units, whether they are high or they are lower. Now we are seeing that these we are valued at 5,000. It means our final product, both the final or the output from process 1 is supposed to be valued at 5,000 plus normal plus abnormal losses if any, and abnormal gain if any. Don't forget that. Then we go and we put our account. We can put our process process 1 account, and we put our particulars here, and put our particulars. Then we put our units. We go to the unit cost or cost per unit. Then we get the amounts. Go to the particulars. Then units, unit cost, then amounts. And that's all we need. We can just copy these ones. We copy them from there, we paste them here. Remember, these ones, we need them the other side, not here. Can cut that one off, we paste here. That's where we want the values. Now we have what we need is that these units, there were 2,000 that we put in the system. And since we did not introduce any stock, then we are supposed to be having that. At a unit cost, we can determine this by saying this one divide by this. It was valued at 2,000. Then we get our normal losses first. Normal losses. Our normal loss in the units, we have 2,000. It is this one. Then what was, because we are valuing it, we are taking the monetary element, we valued it at 1,000. Then we got 2 million. 1, 2, 3. So when we are done with that, then we, of course, now we go to where we are transferring, because this one would have been if it was only one process, this would have been the output. But since it is not it is not one process, it means it will be, this one we will call it process 2, meaning that we are transferring the output of process 1 to become the input of process 2. That's why from here we are saying process 2 account. We are saying process 2 account. And how many units are we taking? We are taking the actual production, which is 17,500. We valued it at how much? It was this one, the unit cost we determined, which is 5,000. Then when we are done with that, we compute the value. It will be this multiplied by this. We get that. Then our last item, since we don't have the closing stock, it may happen that we have even the closing stock, but this time around we never had closing stock. That's what we are going to see in our next video. We see how we handle when there is closing stock, opening stock of raw materials, and when they are work in progress. Those are the ones we are going to be seeing in the next videos. So here we have the abnormal losses. Abnormal losses. And our abnormal loss in units, it's 500. These units, they were 500 units. But what is the cost we are valuing these units? We are valuing them at the cost we use to value the good units at 5,000. The reason why we are doing it is that these units, it's like they came as a result, because we did not expect them to happen, and they came as a result of some things which happened in the process, and we are not able to get our exact units. These units, they are supposed to be equating. When you add and you see that they are not tallying with the units you introduced in the system, just know you've made a mistake somewhere. So we can also sum up this. Even this one, they are supposed to be tallying. If they don't tally, just know you've made a mistake somewhere. So they are equating. Then we can just do one thing and we close the accounts. Of course, we are supposed to close off those accounts. Let's first put in these borders, and we come here, we close off the accounts. How do we close off? We double underline there, double underline that. And the last one. From there, we can even save. Then we've done our process one account. But since you are seeing here in process one, we are saying that this is supposed to be in process two. It means we've credited process one with the process two figure, which is supposed to be taken to the debit side of the process two account, so that we complete the double entry. So we can, I'm going to be using the same sheet. So allow me just clear the data from here, but I'm not going to repeat this. That's why I'm going to just rub off this. We put this one, that level. We just put the units. Okay. Hope you've been able to copy that down. Then we can try to clear this content so that we can try to put in the new information. Then this one, we can remove it, and this will move it to, so that we'll be having an empty account. But here, remember here, it's now process two. But remember, we had the information. Now here, we are not supposed to be having direct materials, because we don't have in the question, we don't have any material that was given in sorry, there is material that was supposed to be added. There is material that was introduced in process two. Yeah, that one is going to be there. Sorry, I had not seen. Can try to undo that. But here we are going now to introduce in another line that will give us, can try to remove these borders. We said here we are going to add in an account, another account, where we are going to put what we transferred from process one. Let's just insert here. Sorry, we are supposed to insert below. Undo that. We are supposed to insert from here so that it becomes upwards. Yeah, like that. Here is where we are going to put our process. Now here we are putting process one. The reason why we are putting process one is because this is where the information is coming from. It is coming from process one. So what did we produce? It was this. It was 17,500. You get, it was 17,500. and it was valued at 5,000. So what was the cost? The cost was equal sign this multiply by this. Let's enter and we get it was that. So have also to change this, the whole of these ones. Clear the information and we'll be having 0 so that we start afresh. This one is done. We can try to do like this so that you get to know that this was done. Yeah, what we have made like in that form, just know that that one is done. What we are remaining is only, what is remaining is only this. Can try to adjust this so that it tallies with what we want. Sorry, you can't do that. It's going to be affecting us because I don't want the other one to extend the other side, but it's okay. You can do that from here. So let's go to our, we said we have to first identify the inputs, and the inputs, we said the input of the other department becomes the output. Sorry, the output of the other of the first process becomes the input of the second process. So our input is now 17,500. That's our input. And they told us that the normal loss is 5%. So it will be 5%. We multiply that by the input and it will give us that. So we get the scrap value, and to get our scrap value, it will be this. We multiply it by this because this is the scrap, the selling price for those units that are being that they have. It's like we are supposed to be having that figure there. It's okay. Let's consider that and we'll be with it as for now, but hope you know where we are heading and you don't get confused. Okay, now we can proceed. Okay, we can now get our good units expected, which are going to be this minus this. It will be giving us that. And when you check here, we have the actual production. And the actual production you are seeing from here, that the actual production was 16,800. Guys, I don't want you to get confused from the raw materials you are seeing they gave us in this two. Since they had not given us the units, there is no way we can divide and get the number of units they introduced as in process 2. We just take this one as, let's say that these are just additional materials. And these additional materials, since they did not start with the first stock, then we are not supposed to value it at the first stock of 20,000 units. Hope you don't get confused from there. Then we get our abnormalities, and we said this time it is going to be this, the good units expected, which is this, minus this. It is giving us a negative, which shows that this time around, instead of having an abnormal loss, we are going to be having an abnormal gain. This is a gain. Why is it called a gain? It's because we expected to get 16,625, but we rather produced 16,800,000, meaning this 175,000 is becoming our, so I can put it here, I put abnormal gain, because there it is showing a negative, there is no way we can multiply it, it will be giving us a negative figure. So we are on this one. This one will be equal sign this. We multiply it by the selling price, which is giving us that figure. So we get our, can get it from here, our unit cost. Since we are using this one, it will be equal sign. You can open up the brackets. We are saying we are deducting the total process costs. But we can get this one a bit later because we are supposed to add, it will be, remember we are saying total process cost. This one, this 47 million does not include this amount. So to get our total cost that we have spent in the whole process, we are supposed to add what the raw materials we got from, the cost of the materials we got from process 1, we add to the cost that was incurred in process 2. Hope you can get that. Let me put it here because you may get confused. Here we are saying we have to look for the total can put it here and we remove this. Total process cost is going to be equating to this. It will be equaling to this, what we have there as the total, plus what we got from process 2. Then we press enter. This is now going to be our new value for that. We can now put our scrap values, but we have them here. We can now divide and we get our unity cost. It will be equal sign this. Can now open up the bracket. So let me put it up here so that you don't get confused. Hope you'll be able to follow. It will be this minus our scrap value, which are those ones. Then we close the bracket, we divide by the good units expected. We are not taking the actual production. Please get that right. We are not taking the actual production. So now whatever we are going to be, these abnormal gains, 175, they are going to be valued at this. Even this output is going to be valued at this. Hope you are getting that. Then we can introduce in our additional material that we got. It was 20 million. Maybe you can just highlight from here and we just post them. We copy and we paste here. Then we get our totals. These units, they should, sorry. We have one which is pending, and we said abnormal gains, they are supposed to be on the credit. They're supposed to be on abnormal gain, they are supposed to be on our debit side. And the units are 175, but the unit cost is supposed to be this. Sorry, this one is still, we need to remove that so that it's still having the other balancing figure, which we need to remove it from there. Okay, it's done. This one we are valuing it at 8,000. Then we take this side, we first write the normal losses. Then the normal losses in units, we had 875, valued at, it was 2000. From here, this is where I get the 2000. Then what will be the total? It will be this, multiply by this, which gave us that, and we get this is now going to be our process. We are not calling it output because we have not yet reached the final process. This is process now. This one is going to be process 3, because what comes from process 2 goes to process 3 as an input. But what are we taking here? We are taking the actual output, and the actual output was 16,800, valued at 8,000. This one, the unity cost. So we can try to get the figure here. It will be this, multiply it by this. Is that? Then we can try to get the totals. We can get them from here. We set totals. You're supposed to get the sum. This one, even if you just say this plus this, is giving us that. Then we add up this one. Sorry, I did not get the answer for this. So it is still having some cross, the double underline, which we are supposed to first remove. This equal sign, this will multiply by this. So we get the equal sign sum. Let's enter. This is now our total. So we get for this, it is equal sign sum. Let's enter. Then we get also the totals from here, equal sign sum. Make sure you rather get these last values not balancing, but this one they must, because there is no rounding off in those units. Can get this one's double underlined, and we see what we can. We get them double underlined so that you get to know that we are closing off. Okay, that one is done. We can even save. If you want, we can add some of the borders. We can apply all borders so that we'll be able to get something that is, you can try to put also these figures in whatever we put in those commas, so that we can be able to separate those variables. I hope it is giving you some good time. Hope you can be able to see what we are doing. And that's all we need so that we'll be able to get that right, and we proceed to the next one. So that's it, and that's the information we needed for that process 2 account. We are going to the last process, and we are going to repeat the same information so that we get to know what will be the final accounts. Okay, I'm going to just remove this the same way I did for the other ones. We clear the content, and when we clear that, we are also supposed to clear. So we have to record some information before we take it out, because we need this. Before we take it out, we have to first copy this one from there. It's what we need only. We can copy that and we remove the information. Clear the content, and we also clear this. But remember, we shall need this information for the abnormal loss account and whatever. But those ones, I will just show you how to get them, because for them, they are very easy. You can get them very fast. They are very easy to do. Clear even that. Okay. Since we have got that, but we have to paste this one, the one we had copied. Oh, it's not even coming. It's not even coming. But we know how it was. Indeed, it is going to be a bit headache to us. We did not write it anywhere, but can figure out how to handle that. We said it was this. Remember, it was the input, and the total value here was, indeed, we've gone to go back and see whatever we did, so that we get to know those figures. We can write them somewhere, and the one we are taking to process 3 is 168, valued at 8,000, and the total is 134,400. That's it. We can now even pick our abnormal gain. Abnormal gain is 350,000, and the units are 175. We can take those ones are enough. We can try to read this. Okay, we can now put these figures. It was 15, it is 16,800, and the unit cost was 8,000, and this was coming from process 2. The total cost was 134,400, then 111, yeah, like that. That's how it was. So we can now go ahead and check out if at all we have what we can do, and we proceed for this. We said we first consider the units. And in this case, our normal units are going to be the output of process 2, which is 168, like that. Then we get our normal unit, our normal loss. Normal loss, we said it is equaling to 2%. They gave us 2%. It's here. Sorry, it is 2%. We multiply by this input, which will be that, and we get our scrap values, which is going to be this when we are multiplying it with this 5,000. It will be that. Then what will be our good units expected? They will be equaling to this minus this. We shall be getting that. Now we identify our production. Actually, the actual production was 16,400. This is the actual production, what we were supposed to produce this. It means our abnormalities are going to be equal sign this minus this, which gives us 64. It means that we expected to produce more, but we produced less. This becomes an abnormal loss. This is a loss. So it is not supposed to be here anymore. It is now going to be this side. So we can go ahead and try to get this information right. We see what we can do. We can try to remove these borders and we do something which is a bit fresh. Okay, and remove even this word total. Okay, since we've got that as 64 as our abnormal losses, then we get the scrap value for the abnormal losses, the scrap sales, which are giving us that. So if it is giving us that, then we expect that it will be that, then we get the total process cost. And we said the total process cost, it is inclusive of the one that was there in that process plus what we introduced. It will be that 199,248,800. This is the total cost. Then if you want to determine the unit cost or the cost per unit, we said it is going to be equal sign this. We put this in the bracket. It will be this minus this our normal scrap values, which are those ones. We divide the answer we get by the expected units, and we shall be getting that. This 12,000 is what we are going to be using to cost our abnormal losses in the process account. So we come here and we start with our normal losses. Normal losses, which are 336. Then our selling price for those normal losses, it is 5,000. So we get here the total, the value. It will be that multiplied by this, which will give you this, which is the same as the other one. Then we record the abnormal losses. And these abnormal losses in units, they are 64. They are valued at which price? They are valued at this, which is 12,000. The only way we are going to use this value is when you are preparing the abnormal loss accounts and the scrap sales. That's where we are going to be putting those figures, but they are not supposed to be put anywhere within these computations of the process. They are supposed to be put in their respective ledger accounts and in the profit and loss. That's where we are going to be adjusting them from. Then we have what we'll call, now this one, since it is the last process, it will be called finished goods. Finished goods, or you can call it stock. And what did we finish with? It is the actual output, which is 16,400, and it is valued at 12,000. It will be this, we multiply by this. So we can get the total because there is nothing we have here. Can get here the totals. Even here, we put the totals, and sorry, supposed to be here, totals. So we can get the totals from here. We say cosine sum.
You have 2 new Instagram messages.
We are summing from here up to here. It will give us that. Then we get this also. It will be cosine sum. We are summing these, the whole of those ones, close that, and sorry, it means I put in many figures. Yeah, there are many figures. I selected a different, it's supposed to be sum, and we are summing this. Let's enter. It is giving us that. It means it is the same information that we are supposed to be having this side. So we put in this information that we have here. It is this. We copy, we paste it here, and we try to get the equal sign, sum. Will be this, close the brackets, and we get the totals. Hope they are matching. And when they are matching, we just know that what we did is exactly what we are supposed to do. So we've got that, and it is giving us what we wanted. So we can try to double close this one, double underline it so that we are closing the accounts. And when we get that, then we just know that we have done what we are supposed to do. The information is very clear, and you can put in the borders so that we get something which looks good, like that. We have the separators, so even if I don't put in again, we save the information, and that's it. The question wanted us to get the ledger accounts for finished goods. It's the one which is a bit unique. Let me show you how you do that. It's very, very easy. Finished goods. Finished goods account. With this one, we are not going to take a lot of space. Let's just use only one and we'll put this side. We'll put this side that since this one was on this is not process 2, this is process 3. Make sure you change that. It is process 3. We are removing this from process 3. It means here we are going to be putting process process 3 account, but remember this is the debit side. We are making a T account. We are removing, you can call this, we have the particulars. We can be having the same like the way you are seeing here. We put all of this, but we debit the fixed account. But remember, we have to close this account. Okay, let me try to do it in that very account so that you get to know. But if I do that, I'm going to disorganize you a bit. Let me remove this one and I copy. Let me copy that. Let me remove this one, and I copy this. Let me just copy this. I show you what I wanted to show you. At least when you understand this, you can go and do the other ones. Because so this is what this is what I'm telling you. This we call it finished goods. Finished goods account. So we can try to make it a bit, merge it. Okay, this we don't need it. What we only need is this. So let me first remove this. I show you something here. What we only need, we need this. This is the one I'm going to pick. Let me cut it from there. I paste it here. Yeah, but the rest of this is going to be removed. Okay, this is what we need. Even this one we don't need it here. Even this one we don't need it. Okay, this is exactly what we need. But remember, we got this information from process 3. It was our last process. So when you get this information, this one you'll be done with our finished goods account. But there is something I want to show you. That's, let me make it a bit. I put it on 2 lines. Put in the borders. This is what I want you to understand. When you're doing accounting, you know that when we've got the finished goods, where do we transfer those items? We transfer them to our income statement. On which section we are taking it to the trading account. That's where we find the stock. So when we are closing off this account, because we want to transfer this information and we take it for further, we give it to the accountant so that they can start processing whatever they want to process. Then we come here and we say we are taking this information to the trading. It's called the trading. You can call it trading profit and loss account. Those are the name. You You can just say, I'm taking it to the trading account. That one is enough. But if, because you know this is accounting, this is where we take the information, the stock we've purchased is supposed to be taken to the trading account. Can try to increase this. I want this thing to be fitting here so that I can put in the units. Okay, that one will be helping us. Then we put the units. We put the exact units 16400 so that we close this account. We are not leaving it open. Then we remove the same amount 196800123. Then we get the same totals. Then we close off. Of course, even if we had not put the other whatever, we could just close it off from here. Let me just close off like that. Just know we've closed it off, but this one they are not supposed to be closed. Just double underlining, but you know what we only close up. Even the cost is not, the unit cost is not supposed to be closed off. But if you want, you can just do it like that. And that one will be done. There is nothing we shall need from there. Then the other thing I wanted to show you, when you create a normal loss account, since this one is on the credit side, you bring it this side and you say from process 3. So we bring all the normal losses we had for process 1, process 2, process 3. We put all of them here, the normal losses, because this account is going to be having normal losses. Normal loss account. So we bring all these figures you are seeing here. We bring even the units. We sum them up from here. Then even this one for the sales, we do the same. We open up this account, the scrap sales account. Even for the abnormal losses, we use those double entries, the one we've been following, that when those abnormal losses, when we sell them, we expect that we are going to be debiting our scrap sales, and we credit the abnormal account. Remember, on recognition of the abnormal losses, we had already credited. Sorry, we had already debited. When we credit it, it means we are trying to reduce that normal loss that we've incurred. You get that? Because all of those accounts, the normal loss, the only account that is going to be remaining closed, sorry, open, it is maybe for the scrap sales. But even those scrap sales, the balance that will remain there is supposed to be put to the bank. It's supposed to be, if it is remaining, upon deducting these abnormal gains and abnormal losses, we've removed everything. What remains there, we close off and it goes to the bank. I'll do another number which has at least one account so that I be able to show you how to do those, to just make those ledgers. But what we need is this information. If you know how to compute this, the rest is just double entry. If you know how to credit, and when you know that when I credit something, there must be a corresponding entry somewhere. When I credit this, I'm supposed to debit another account depending on whatever information you will be having. So that's all. Maybe changing for you here so that I don't want you guys to get confused. From here, you will say that this person said the normal losses and they left the other units. It it is 336. This is 5,000. Then this is 168. I'm just using the last one, but remember we had started with some accounts. But I'm just using this one because they are the ones which are available. This is 336. And this is 5, sorry. This is 5,000. And the last one is giving me 1680000. So that's how you close it off. Of course, this one we don't take it to that side. No, this one, the way we close off these normal losses, it depends on where we are going to be including these figures. Remember, these accounts, they form part, for these normal losses, for them, they form part of the cost of the items. So it will reflect on the other, depending on how the other accounts have performed. Because at the end of the day, when you have got these units, we have to transfer them as in terms of the sales you've got. Because remember, these accounts, we've got the values. We have their values. So we transfer them, and when we adjust with the other gains and losses, and we see what we shall be remaining with. So it will be the one that we'll be closing with from here. Then the other thing I wanted to highlight a bit is one on this one. If they ask you at what will be the cost, because this one you have given us the costing method, you have shown us how we get the unit cost, but the question will be, what will be the unit cost that we are going to be basing on to determine the selling price? These are the units, these are the amount. You can easily divide this by this to get the actual price, or the actual unit cost they are going to use, so that they can put a profit component and they determine the selling price, so that they can be able to compare with what prevails in the market, depending on which method they use to determine their selling prices. Hope you'll be able to follow up, but what I'm going to be doing now is concentrating more on equivalent production, because I'm very sure that one gives the students headache, and that's what I want to concentrate more. I put more concentration and I go step by step on each and every category, especially when you have work in progress, when you have opening stocks, when you have closing stocks, and when you have all of them plus these losses we are talking about. Because this, if you don't understand this, make sure you watch this video for as many times as you can, so that by the time you get to watch the other ones, you will be able to compare and you'll be contrasting and getting something out right. Okay, until we meet again, it's bye for now.